Welcome viewers to another episode on REITs by reitspro.com, and I'm Gaurav Jain. Our website reitspro.com. You can also connect with us on mail or on WhatsApp or Telegram. There's a group also, a WhatsApp group. The details are given in the description. We'll talk about later also, which you can join. So before I go on further, I'd like to explain that today the video is on real estate investment trust regulations. And what we'll do is we'll highlight on a small yellow box the main points, and we'll give the extracts which you can pause to read thereafter because they are lengthy, so you need to pause and read them. And third, if you want the full guidelines, you can see the SEBI website and consult legal experts also if you want to make any decisions. So take this video as an educative video only. The first thing to understand any regulation is to see what the intent of that regulation is. So if you see the real estate assets have always been capital intensive. Now Indian capital markets are mature now and efficient, and a framework is what it provides for better transparency and flexibility than normal real estate investment. So it's financializing real estate, and the framework basically gives a safe environment, a good market environment for investors. So the framework talks about assets, people and institutions, and also about the processes and mechanisms. That's what basically the whole legislation is about. Let's now take it one by one, but to do that, let's see the REIT structure first. So if you see the REIT structure, this is what a structure is. The left one is a very simplified version, but this is the more elaborate version, and we will take up the red ones first. The green ones are the ones we'll take later. So you can pause again and see here what the structure is. So we'll take up REITs first, then the unit holders, then what lender is, and so on. So if you look at the REIT, the primary requirements is that the value has to be more than 500 CR of a REIT, and it has to be registered. Secondly, the offer has to be more than 250 CR rupees, and these are the snapshot of the guidelines. Now again, there have to be at least 25% units which are to be offered, and this kind of changes as the total size of the REIT changes from 1600 to 4000 crores and above. So you can read up these guidelines as well. What this basically ensures is that there is a large and diversified asset base for REITs in the market. So they are not small REITs, and they're pretty large ones with lots of capital which come in and give investors a diversified base. The second one is about REIT unit holders, and what a unit holder means, that's defined. The second one is that the minimum number of investors for any REIT has to be at least 200, and the minimum has to be 25% of the units. So for example, a REIT has 1000 units, at least 250 units must be out in the market as for the IPO. Now what this does is that again it gives a large investor base because of the number as well as the number of units. Now the REIT guidelines go on also to define a strategic investor. So it defines what banks, NBFCs and mutual funds can invest in REITs, and the minimum amount is 5% of the units of total offer size that any entity has to be called a strategic investor to invest in REITs. So again, the impact is that it opens up institutional markets. Then we come on to the lenders. So what are the lenders like? So REITs can issue debt securities, and a maximum of 49% value of REIT assets could be in the form of loans. And if it crosses 25% to reach up to this 49%, then an approval as well as rating both are required. Approval from the unit holders and rating from a rating agency. So the impact is safeguarding the REIT and the investors from over leveraging. Next, the guidelines talk about the real estate investments. So the REIT could be holding the real estate either directly or through SPVs or holdcos, holding companies. Let's get down to the fact that what are the kind of properties it holds. So 80% of the value of assets has to be completed and rent generating assets. The second rule is that 20% of the value may not be rent generating and completed, and there are certain conditions thereon, which is that they could invest in under construction property, mortgage backed securities, or equity of real estate companies. So basically the focus has to be more onto real estate related activities, which this 20% has to be invested in. The third one is about real estate which is not allowed. So vacant lands is not allowed. However, there is a condition that if there is already a project that is rent generating and there is some contiguous land or there is an extension of the existing project which is being implemented in stages, this condition of vacant land does not apply. So these 2-3 things gives us two basic impacts about what are allowed and not allowed. So 80% has to be rent generating, so that safeguards you from speculative investing, and 20% gives you in under construction, so on, and about contiguous lands also, which allows room for growth as well. So now it comes to another aspect when properties by REITs may be sold. So the regulations are very clear about it, that there could be no sale of properties if the property is not held for at least 3 years, and the sale of properties has, if it crosses 10% of the REIT value, you need to take unit holder approval. And the third thing is that the valuation has to be done from 2 independent valuation experts. So the variation as well as a valuation, both are specified here in these regulations. The other conditions are, because the valuation is done now 2 times in a year, and that kind of gives a line of what are the previous prices and so on. So all these aspects basically safeguard investors from non-transparent nature of real estate. The next we come to is distributions. So distributions is what is regularly given out to unit holders, which are sometimes in the forms of dividends, interest, or amortization, or whatever. So SPVs need to distribute 90% of the cash flows. So just as the structure was that the SPV has a REIT above it and then the unit holders, so these are the conditions, and apart from that it has to be at least once in 6 months. Today REITs in India are distributing every quarter. The impact is that we have regular, stable and predictable cash flows from REITs as investors. The next is about sale of properties itself. So what to do with the sale proceeds? So either they need to be reinvestment done, or a distribution of 90% has to be done in 1 year of selling the property, any property that the REIT sells. Now again, this avoids speculation and unnecessary retention by the REIT to the cost of unit holders. So these are what it does for properties as a brief. Now you can subscribe to our channel if you've not done so. Like I've already mentioned, the discussion group is there. The link is there in the description of the video itself. Now the next part, we come to the parties to the REIT. So if you remember, I talked about that these 3 things in green would be talked about later. So this is what we're going to do. These are the main parties to a REIT we are going to talk about now. So to talk about these parties, we need to understand that there is a sponsor to a REIT, and he actually is the one who has a lot of it. Typically it's a developer who has the assets and he transfers it onto a REIT, and there is another party to the REIT which is a trustee. So he first of all, the sponsor identifies and appoints a trustee. So the assets are transferred onto the SPVs or to the REIT directly, and units accordingly are issued to the sponsor. To correlate this with a practical example, this is about the Brookfield India REIT, and an example here is given. So there are 3 things there: BISREP India Office Holdings, which is a sponsor, party to a REIT, which is on the left, Axis Trustee, and the Brookfield Management Services Private Limited, which is a manager. So these 3 together are the main parties which now take the REIT going forward. So the sponsor has to be, basically this is the definition of a sponsor and a sponsor group. After that we come to what are the requirements. So if you look at it, the holdings have to be each sponsor has to have at least 5% of the holdings, and the net worth has to be upwards of 500 crores, and there has to be an experience also attached to the sponsor. The next part is the trustee. So the trustee holds the assets of the REIT, and the all things like getting an agreement with the manager and overseeing the activities are done by the trustee. That's the function of a trustee. So the manager is the third party. So the IPO along with the merchant banker is what is the main responsibility. This is one of the main responsibilities of the manager, and everything henceforth after the formation and the IPO is then done by the manager, and the manager has to basically report to the unit holders and to the trustees also. So the all assets and investment decisions, incomes, distributions, etc., these are all responsibilities of the manager, and the manager also appoints the property manager as well as the valuation expert to do work. So if you look at it, the party to REIT is a manager, reports to the trustee, and they in turn report to the unit holders. So that's how the structure gets secured. Two thoughts. The first being that there is a need to continuously update oneself, because as I will just explain, there have been changes in February 2023 also. And secondly, we have a community for REIT and invit discussion. The link is given in the description of this video, and you may also join the same. So to elaborate, you need to update yourself continuously now, because the REIT notification, invit notifications were first done in 2014, and 2016, 19, 20, 22, there have been substantial changes over a period of time. Also in February 23, there have been some changes. So if you see the 14th February 23 amendments talk about listing and other governance related issues, and they have now come more in line with the SEBI LODR regulations 2015, and these are the kind of topics that it touches on. At the end of February also, SEBI has proposed to let the sponsors have their stake throughout for a very long period of time as per this table. This is a proposal. So we would see continuous changes in the regulations to suit investor requirements as well as the market needs. So the summary is this, that there is a certain intent and there is an outcome. So the legislation, has it been able to address these issues? You can pause here and read, and you can please write in the comment section and tell us more about what you feel about the legislation. Thank you for watching this video. Do like and subscribe to the video. Thank you.